Last week brought plenty of uncertainty to the markets ahead of the UK election results, non-farm payrolls, and the People's Bank of China interest rate decision. So let's see how the news affected the FX and Commodities Market. I'm Louise Macaulay for Dukascopy TV, bringing you Market Glance in association with Investing.com. The pound rallied against the dollar on Friday to the highest level of 155.21 since the end of February. It was up 1.39% for the day. Euro Great British Pound ended the day with a loss of 1.85%, finishing at 155.21. The US dollar index reached the high of 95.17 right after the US employment report, but slipped to 94.9 in late trading. Overall, the index recorded its fourth consecutive weekly loss at 0.57%. This coming week, traders will want to keep a close eye on the Bank of England's monetary policy announcement due today, Wednesday's UK inflation report, and US retail sales and consumer sentiment out on Thursday and Friday respectively. Moving over to the commodities market then. Gold prices rose on Friday but eased in Asia trading on Monday after the People's Bank of China cut interest rates for the third time in less than half a year, to currently sit at 5.10%. Investors anticipate that policymakers will do more in addition to a rate cut in order to boost economic growth, as China reported a trade surplus of $34.1 billion as opposed to the forecasted surplus of $39.5 billion. On the COMEX, gold futures for June delivery eased 0.08% at $1,188 a troy ounce. Silver futures for July delivery dropped 0.09% to $16.45 a troy ounce. Elsewhere in metals trading, copper rose 0.46% to almost $2.93 a pound. Moving over to oil, and crude futures were almost unchanged on Monday. Brent crude oil for June dropped by 3 cents to $65.36 a barrel by 3:51 GMT this morning, after declining 1.6% last week. June WTI broke its positive 8-week cycle and dropped 12 cents to $59.27 a barrel. In relation to China's rate cut, Rick Spooner of CMC Market says the stimulus is probably seen as helping to soften a decline rather than really turn things around. Well, that is all for today's Market Glance. We'll be back with another one at the start of next week, but in the meantime, we have plenty of releases planned to keep you informed throughout the week. Goodbye for now.